Hello everybody and welcome back. Today with me there is Yu Zhang from Matthews Asia. Yu is a portfolio manager and dividend specialist. Welcome Yu.
Hi Thomas.
Yu, today we want to talk about dividend strategies in Asia. And of course the first question is, what influence does COVID-19 pandemic have on Asian dividend landscape?
I think for this year, because of the virus outbreak, we have seen many Asian companies, they are facing a near-term, very large degree of uncertainty in terms of the underlying business operations. And reflected to the earnings outlook. Also, we are seeing a very strong near-term headwinds. If I look at first quarter earnings, Asian earnings already came down about 20% year on year. Even though I think at this moment, market is starting to pricing relatively a rapid recovery, with the reopening of the economy. The full year outlook on earnings is still to be fairly relatively weaker. You will be looking at about year-on-year single-digit decline for Asian as a whole. And as we understand, dividend is paid out of the earnings for the most part. So that means dividend for Asia this year is also likely to see a little bit of pressure. So I wouldn't be surprised we're gonna face a negative growth for Asian dividends for this year.
So do you have any estimations for dividend payments in Asia for 2020 or 2021?
At this moment, I think I am more in the view of the market consensus that we are likely to see that dividends for 2020 probably is going to produce a negative growth, but probably only in the single-digit decline type of range. I think the degree for dividend decline compared to the earnings decline probably is going to be more moderated. If we look back in history, always Asian companies, and they are more cautious in terms of cutting dividends, whether it's during 08-09 GFC period, or whether it's during 2011 Euro debt crisis. Earnings fell pretty significantly in both instances, but dividends actually still fell, but the degree of the decline was much more moderated. So I would expect we see a similar pattern for dividends this time as well.
Which industries and companies will be affected, especially when it comes to dividend payments or dividend cuts that you are expecting?
Yeah, I think it's quite natural that companies operating with a fairly levered, financial leverage, and the balance sheet carrying a lot of debt, underlying businesses are more sort of commodity business in nature. These types of companies are likely to face more stress near term, and including energy. I think very obviously given where the oil price is today, and also resources, materials, including certain financial companies. If you look around globally, commercial banks are under a lot of pressure, both from a very low interest rate environment, flattening yield curve, affecting their ability to produce profits, as well as government is pressuring a lot of the banks to protect the borrowers, the SMEs, so to speak. So they have to carry on certain degree of national service. So dividends also will be at the moment put on the back burner. So we have seen some of the banks actually are cutting dividend quite significantly.
So there's this strong opinion that dividend strategies protect your portfolios during times of crisis. How did your dividend strategies perform during the last couple of months?
I think during last couple months, we're talking about April and May, market has staged a very strong recovery.
Yeah.
So our strategy actually has been performing relatively quite well, mostly because within our portfolio, we usually view our portfolio investing in two different buckets. On one side, you have more stable, high dividend paying stocks. So these are the more stable sort of elements for the portfolio. And on the other side, we actually investing in what I call dividend growth stocks. So these dividend growth stocks, underlying business still has quite a bit of room to deliver the growth. However, these companies, they are already paying dividends while the underlying growth is being delivered. So we try to balance the stable dividend paying names with these fast growing, quote unquote, dividend growers. Over the last 2 months, I would say, when the market is recovering, we have seen a very strong share performance from the second bucket, which is the dividend growth bucket. So that really has helped the relative performance for our dividend strategies. In terms of businesses, mostly you'll be looking at about consumer discretionary, technology, as well as certain industrial companies. So these companies actually they have come back from fairly depressed share price fairly strongly. Yeah.
So when it comes to your portfolio, what changes did you undertake in the structure and the allocation since the beginning of the year?
Yeah. So we basically a more bottom-up stock picking sort of approach, care mostly about what kind of good companies that we should own as a perpetual owner, so to speak. So whenever we are able to identify some of the good structural growth businesses at a relatively attractive price, we'll be very much intrigued. So with that in mind, I think what the COVID-19 triggered, stock market crisis has sort of offered to us was really a good window of opportunities to get our hands on some of the very interesting, strong structural growth businesses. But because of the concern on the virus outbreak, for within a very quick short order, we had a severe valuation collapse in many of these stocks. So for our portfolio, we were all over these names, during early days when the virus hit China first. So we quickly implemented a couple of Chinese, we think, very interesting growth businesses. And then as the virus moves on to the rest of Asian regions, we essentially follow the path of the virus, went to Korea, went to Taiwan, and as we are speaking right now, Southeast Asia to some extent. While the market is reacting in near term to the uncertainty created by the virus outbreak, we actually are taking a more medium to longer term view, trying to pick some of the quality companies, but they are now being offered with a very attractive discount. We don't think the virus uncertainty is going to change these companies' long-term growth trend. So we will be very happy to buy these names at a right now more attractive price.
So you mentioned these two buckets, these two kinds of different stocks, and especially when it comes to stocks with that you are expecting to grow there, the dividend. Where
Correct.
do you currently find these opportunities, in which industries, and what kind of companies do you prefer currently?
Yeah, it is a very interesting looking at Asia that you are seeing the multi-year structural growth story of rising Asian consumption, the increasing spending power of Asian consumers. That trend is really being held up fairly well, even with this virus, added uncertainty. So we actually, on the margin, are seeing sectors that are more exposed to this positive trend of rising Asian consumers. These sectors, or some of the individual businesses within these sectors, actually are still able to deliver very strong business growth and also earnings growth. And dividends have been, kept in pace with these rising earnings. To be more specific, we think sectors such as healthcare is a very interesting sector for Asian investors. Especially, I think for our strategy, we have picked a couple of Chinese medical device companies, as well as contract research organization businesses. So these healthcare, relatively small size companies, and they are really enjoying a very strong tailwind. These Chinese device makers, medical device makers, their technology level is catching up with multinationals. And because their price is so much more attractive from Chinese buyers' standpoint, so they are replacing some of the imported, more expensive, competitive products at a very rapid pace. As a result of that, these medical device companies in China are producing a very strong earnings growth. And you wouldn't tell that we are seeing these kind of positive growth with a strong COVID-19 sort of negative impact, sort of overall trend happening for the broad market. So they are taking off totally with no regard to the broad market uncertainty. And we were lucky to pick some of these names for our Asia Ex-Japan dividend strategy last year and this year. We've been benefiting from the strong share performance, and the dividends for these companies also have been, growing more than, I would say, 20 or 30%. In certain cases, actually doubling the dividends.
So this was Yu Zhang from Matthews Asia. Thank you very much, Yu, for being with us today and sharing your views with us.